In this video, you're going to learn how do bankers exactly become millionaires, right? What are the type of bonuses you could earn, right? Now, through my coaching program, if you're new to the channel, I help people all over the world secure high-paying jobs. I've worked in the finance industry myself for over a decade as an intern, an analyst, and all the way up to director level, and securing top job interviews at some of these companies. And if you reach out to me with the link in description, I'll give you some advice that can help you out. But let's talk about the actual high pay that these guys get, right? They're these managers, these CEOs, these big bankers, they're making tons of money right now. We're going to go through some of these numbers. You can see how high some of their salaries are, going all the way up to almost $500,000 in hedge funds. And we're also going to go through when do those bonuses occur throughout the year? When do people job hop to increase their salaries? We're going to cover all of this in this video right now. So the first thing I want to talk about is the CEOs, right? The bosses. Now, FTSE 100, if you're not aware of FTSE 100, it's like the S&P 500, right? S&P 500 you have for the top companies in USA, and in the UK you have FTSE 100, which is like top 100 companies within the UK. Now, what's kind of interesting here is it's got a massive headline here that says that when it comes to the start of the year, right? When it comes to January, this is January the 6th, right? So January the 6th this year. So within the first few days of the year, the FTSE 100 bosses, the CEOs, they make more money by the 6th of January than the average worker will make in a year. So in the first 6 days of the calendar year, they make a higher income than a whole year, 365 days a year of the average worker. So it shows you how disparate, how much more money they make than the typical employee. Now, if we go through this in a bit of detail all the way to the bottom, it talks about how much money they're making. We're going to go through some specific numbers soon. But it's got this nice little here. It says, a feeling that the economy works for the enrichment of a tiny elite at the expense of a wider society is an underrated cause of populist anger and the support for extremist politics. Policymakers who fail to address this glaring inequality will store some big problems up for our future, right? And this is what you see. You see instability occurring all around you, social instability. And I think a large part of the social instability you see is driven by economic factors. And I know people complain about other issues, mass migration, gender issues, the education, brainwashing of kids in the school, all these type of things, but the culture war. But I think if you had all these problems, but people's bank accounts were fine, their cost of living was fine, they could have a decent middle class life, they wouldn't mind that much. I don't think there'd be that much complaints about all these other problems if people could live a decent lifestyle, but they clearly can't. And you've got people at the top who are benefiting dramatically, right? So let's look through some of the actual monetary amounts that they can make. So we're going to go through this banking bonuses around 2024, so just last year, so quite recent statistics. In this first, you can see here, it says the proportion of bonuses as part of total compensation in financial services in 2023, right? So it gives you some actual numbers that are quite helpful to see. So if we look at the average total compensation where it's the highest in hedge funds, right? Top three are hedge funds, macro sales and trading, and equity sales and trading. So you can see a large part of their total compensation comes from the bonus, around 40 to 50%. So around 40 to 50% is performance driven, which means, of course, the better performance they do, the more profit driven that they are for the company, the bigger the bonus they get, the bigger amount of money they can make overall, right? So if you compare the amounts, let's go through this. So the average bonus for the hedge funds was 250,000 US dollars. Sales and trading would be 220 roughly $1,000. Equity sales and trading is $178,000. So it's really significant amounts of money that people are making. Now let's look at the bottom end, right? What are the people making at the lower end? Now, technology, the average bonus is, let's say $60,000, and their total compensation is $230,000. Compliance, the average bonus is $60,000, and they overall make about $200,000. Operations bonus is about 200. Bonus is 60,000 roughly, and the average total compensation is 180,000. Now, just for your context, so we're referring to technology, compliance, and operations here, which are all departments that support the sales and trading, the traders, salespeople, all the other analysts and things like that. They maintain the infrastructure of the bank or hedge funds, wherever they're working in the finance industry. So they're kind of factors, important teams. They do make less money overall, but they're still quite high compared to other office jobs. Now, technology, compliance, and operations, typically they won't be working those super long hours like the hedge funds and the sales and trading guys. They'll be doing support roles, so they'll be working 9 to 5, 8 to 6, but making 100K overall, roughly, let's just say for all these guys, quite a lot of money to be making for an office job that takes slightly more time. So these are the type of things, right? If you want to, how to get rich, how to get these higher salaries, how to get six-figure salaries, things that I've been on during my time in the investment banking industry as a director, you can reach out to me, like I say, link in description, for some coaching programs and a career code course that can really help you out to reach these levels of income. Now, if you want to earn more and move faster, I'll show you how I did it through those coaching programs, right? You want to be a six-figure earner as quick as possible. You see the rise in inflation, right? And you see how people are progressing quite quickly. I know people making 100K as a lawyer in the finance industry. They're saving significant amounts of money in a month or more. They're investing. So it really does go to show, if you can get into a high-paying job, it'll really help mitigate the risks of the cost of living crisis, of the inflation rate. And I know those things are high. I know it's easier said than done, but it's like try to be proactive in fixing your situation, right? Rather than just waiting for maybe a government or a political solution, because clearly those aren't working. Then we have this section here of the article where it talks, how do banks actually pay the bonus, right? And they pay it a variety of different ways. Part of the bonus they get is through immediate cash payments, which means you just get a bonus in a cash sum. Then some other bonuses you can get depending on how the bank operates. They might give you stock options, so you might get stock in the company. Like at Goldman Sachs, you might get, for example, 50% of your bonus in cash, so you can just get that in your bank account and save it, invest it, spend it however you want. But maybe 50% will be in the specific deferred stock options, which could mean that you get of your bonus paid in Goldman Sachs shares, and you're not allowed to sell it for the first, say, 2 to 5 years, right? And vary depending on your level of seniority, how much they want you to be invested in the long-term outcome of the company. So it really is an interesting type of dynamic for them to put you in. Now, I know what you might be thinking. Well, okay, you step into the finance industry, how much money can you actually make as like a joiner? So let's look at the pay at different levels in sales and trading roles. At the director level, the senior level, you can get paid a total compensation of $450,000 US. VP, it'll be 373, and at associate level, it does depend. You'll be around 350, let's just say roughly. At the more junior level, you'll be at 190. So these are significant sums of money you can make, right? And if you keep your cost of living low, you're kind of set up for life. If you work in the finance industry for 5 to 10 years, save and invest it. Don't get caught up in lifestyle inflation. Don't get caught up in expensive lifestyle habits, going on expensive trips. You will really be able to survive and thrive in this type of environment. Now, I just want to go back to the first here. I think an interesting thing about the table is, of course, you've got to bear in mind these can't be skewed to a survey of the top banks, Goldman Sachs, Morgan Stanley's, things like that. And also, obviously, this is an average. So, of course, the top performers will get the higher end of that. Lower performers get lower end of that. So there is a bit more to it than this, but it's quite interesting to actually get some rough statistics here. Next up, I want to talk to you about how does it work throughout the year? When do the bonuses get paid? When do people tend to job hop? When do they stick at a company that they might not like just to collect the bonus? So this is how it typically works. Firstly, you have dry season, which is October to January, right? This is when there's less recruitment. Typically, people are not job hopping. They stay at the job towards the end of the year and the start of the year, because that's typically when the bonus is paid, right? So what I mean by that is you work throughout the whole year from January to about December. Bonuses typically get paid the next January, or at least in the first few months of the next year, your performance from the year before. So you work hard January to December 2024, for example, then you get your bonus in January or February 2025. So what people do is towards the end of the year, they would have completed most of their work. There'll be slower levels of business. There'll be less people moving jobs, less business or client flow, workflow coming in. So what they do during those type of months, So during the dry season, like I say, people aren't switching jobs, they're staying at the current job that they're in. And also what they're doing is, say, waiting around to collect their bonus, and then they'll switch to a new job after they collected their bonus, right? They'll be slowing down with work. And then you have the busy season. So after October to January, end of the year slowdown, they go into the busy season. Now the busy season will typically be just after the bonus is paid. It'll be around January to March. And what people will be doing is they would have collected their bonus, figure out whether they want to stay at the same company or just cash out, in the sense of going to another job, hopping, getting a higher paying salary at another bank. So that's another option for them, right? People collect their bonus, look for a new job. So by the time it's around end of Q1, start of Q2, start of summer, they'll probably be at a new job where they've got they collected their bonus from their old company and brand new started at a new company. Now, let's look at some of the details here in this table. It talks about when the bonus is typically paid. Goldman Sachs is around January when you're told about the bonus and you're paid at the start of February. Morgan Stanley, similar thing. You're told around mid-January what your bonus amount would be and you'll get the payment at the early February. And Bank of America is up here also. So you get told in January and then payment mid-February. So they're all around the same time. People collect their bonus, then figure out what they want to do. So what's interesting here is the implications, right? In the sense that people collect their big six-figure bonus, then they have to decide what they're going to do. So what do many people do? What are the implications here? For career planning, typically you time your career move to stay around in the bonus period, right? So you're not going to quit your job in Q3, Q4, or Q1 when you've been working hard in the last year or so. You want to collect your bonus and then look to leave. Then it's a busy time to leave around the end of Q1, Q2, Q3, so late March. Throughout the summer period, this is when people are job hopping. And then again, it slows down at the end of the year. And then people go to the new company, stick around for a couple of years, and then job hop. So typically banks will pay the big bonuses to prevent people from quitting and moving. Now, of course, if they don't mind you leaving, they're not going to give you a good bonus. They're happy for you to leave. They might send you an indirect message that they want you to leave by giving you a small bonus. And you might know, depending on your market knowledge, these are things I can help with through career coaching. You'll be able to gauge a bit, am I getting a decent bonus, or are they trying to send me a message like, we're giving you a small bonus, we want to push you out the company, we're going to give you such a small bonus, you're going to consider it an insult and look to leave. So these are the type of things. And also bear in mind analyst considerations, right? So if you're at the more junior end, you might not want to be job hopping because, again, you're at the more risky level of your career in the sense that you might not have the experience or the network to move from one bank to the other. It's better to build a strong reputation at one particular finance firm or corporation in general before you start job hopping, because you need to build a solid foundation of your skills. You don't want to move too early to a new job and then all of a sudden you're just not considered as someone who has the experience to do that job, and you're stuck there without knowing how things actually work and how to really benefit yourself in your career. So these are all type of interesting things worth knowing. A lot of people really overlook these things. They focus on simply, oh, I just want to work for a big name company. They don't consider whether they're getting paid fairly. Are they making a decent amount in their bonus or not? These are all the type of things to really consider, right? And this brings me on to a part of my course, which is linked in description. Build financial power, not just a paycheck. You build financial firepower so you never have to beg for a paycheck again. Your financial freedom plan is your insurance plan against an unstable job market. Remember, your salary is not a safety net. Plan your escape now, right? And what I mean by that is you don't want to just be like, oh, I'm working for a big name company, I'll be fine for the rest of my career. Many people won't be fine. Many people won't be able to put themselves in a position where they have a career for 10, 20, 30, 40 years when it's hyper competitive, when banks might look to cut costs and you might be at the junior end and they want to get rid of you, or you're at the more senior end and they want to cut middle management. You never know. That's why you need to focus on that saving and investing part of those bonuses when you get them. When you have good years, best to maximize those, right? People have good and bad financial years, and sometimes those bonuses, those big numbers that we'll go back to again, you don't always see them across your career, right? You might have good years, but also the bank or the company you're working for might have good and bad years. For example, many people have got big bonuses in years where their performance wasn't good because the bank was doing so good. So these are the type of things you can't really predict all the time, because it's not all the time down to your performance. So really think this through when it comes to selecting what career path you want to take, particularly within finance. What are the bonuses getting paid? What market research can you do? Because this information is public on major banks at least from anonymous surveys and things like that. But it's the same for other industries: tech, finance, law, accounting, any other major industry. Even in the medical industry, when you have private companies in the medical industry, you'll be able to research how much is the bonus, because you don't want to constantly be getting undercut in terms of the bonuses, right? And like I say, those bonus amounts are high and skewed towards the more senior people. So obviously this is an average. I'm sure you know how averages work. So people at the lower end probably not making as much, but it's worthwhile considering that hedge funds are more risky. They have a more of a high and fire type of mentality because you have more risky investment strategies. Some things they do aren't always above the board. They tend to get fined quite a bit because they cut corners when it comes to some of the finance approaches they take, some of the investment strategies, some of the dodgy links they might have. But there is a high reward for that high risk, $500,000 in terms of average total compensation. And then if you want more of a stable career that pays well, finance, technology, compliance departments, operations departments, working in the tech department, you can still make a decent salary of 200K or more. So it's worthwhile considering what you actually want before you step in and just think, oh, I want to work for a big bank like Goldman Sachs, or I want to just make a high six-figure salary. What is high six figures? Are you going to get paid fairly? You're willing to work those hours? Are you going to be getting paid fairly compared to the market? You don't want to be a hardworking hedge fund employee, right? And then you're getting a bonus of 100K and everyone else is getting bonus of 200K. Then you really need to consider these statistics and don't get caught out. So I hope you found that helpful. Like I say, link in description if you want to get some career coaching from myself and help you earn those high salaries, because many people are just not making enough money to really survive this difficult inflation, cost of living crisis situation. So like I say, if you want to reach out to me, link in description. Mailbox Money is a newsletter I have, which is free tips for you to your mailbox on your email on Mondays and Fridays. So you can have a look at that. And thanks for listening. 2 recommended videos on the screen right now.